When it comes to buying property, taking all circumstances and options into consideration and acting quickly when you need to can be a bit of a balancing act. Getting a pre-approval can help you do just this, giving you a better chance to lock down a property before someone else does. Welcome back to my channel. My name is Reese. In today's video, I'm talking about what a home loan pre-approval or home loan conditional approval is. A pre-approval or conditional approval, which are the same thing, means a lender has agreed to lend you the money needed to put towards the purchase of a property, but has not yet gone to final approval for that money. By getting a pre-approval from a lender, this allows you to now go and look and make offers on properties with confidence. Different lenders use different terms to describe the word pre-approval. They essentially all mean the same thing, and some of them that you may hear would include approval in principle and conditional approval and pre-approval. It can be confusing, but try to think of it like this. It is an inquiry for you to establish your financial position, and it is an indicator, not a guarantee. I want to stress that it's not a guarantee, as to how much a bank will allow you to borrow to put towards the purchase of that property. Now, not everyone is going to be looking to purchase a property at a house inspection. There would be a set number of people there doing research and their homework to get a sense of the market. With a pre-approval, you're in a bit of a different situation here. So you're at this house inspection, and if you like it, you can with confidence make an offer for the property, potentially being able to purchase it if the vendor accepts the price that you offer. Another fantastic thing that pre-approvals do is stops you from overextending on your budget. Knowing how much you can borrow is important because it allows you to make offers within the bounds of your borrowing capacity. This should stop you from overextending and essentially putting yourself in debt that you can't afford to repay. Generally, it's a good time to go and seek a pre-approval from a lender or bank once you've done some initial research. Things like working out your rough borrowing capacity using online financial tools and calculators, working out how much you can afford to service that loan, making sure that you've looked at different lenders and the home loan packages that they offer, and finally, understanding which suburbs you're actually interested in which will fall into your budget. Doing this is really important as you do not want to apply too early. Conditional approval is generally only valid for about 90 days, where you will then need to go and reapply, where the lender will reassess your situation and give you a new pre-approval with a new borrowing capacity or amount. To apply, it's generally really straightforward. You can apply either online or actually go into a branch where a professional lender will assist you in the application process. Your lender will look at a wide range of categories and parameters, and I'm just going to go through a few of them now, but let's start with debt. So they'll look at other home loans, personal loans, car loans, and credit card debt. They will also usually take your assets into consideration as well, which include things like shares, cars, and valuables. Typically, your lender will do a credit check. This is a standard procedure for anyone who is applying for a pre-approval or a home loan. When looking to receive a pre-approval as well, the lender will generally want to know some information about the type of property that you're looking at buying. This will generally be publicly listed information, such as the address of the premises and the type of property, whether it be a house, a condo, an apartment, a unit, or a townhouse. They will also want to know your income streams, such as your salary or wage. On top of this, they will want to know all of your expenses, which can be broken down into categories like your lifestyle spending, food spending, grocery spending, your bills, utilities, your rent, anything that basically you are forking out of your bank accounts to survive. This is why I often mention in my videos why it's so important to track your expenses and your finances through something like a spreadsheet. Having access to this information is super useful in events where you have to perform a time-consuming task, such as providing all of your expenses to a lender, for example, or a bank who are going to basically be providing you with a resource such as a home loan. Once you have received a pre-approval from a lender, you can now make offers on properties with a high confidence that the bank or lender will give you that money once you make a purchase. Just note that you can actually make some purchase conditions on the offer that you put in for a property. Just as an example, you may put subject to finance or subject to building and pest inspection on the offer form to cover your own behind, essentially, to make sure that if you don't receive finance from that lender for whatever reason, you aren't going to get caught with a property that you can't afford to pay for. Also note that when you do make offers and you do make purchase conditions on the offer forms, they will generally have an expiry date. Let's say it's 2 weeks or a week. Just make sure that you will have enough time to go to your lender to make sure you can ask the questions and actually get the information you need as to whether or not you're going to be given this money. A good idea is to speak to your lender and just ask them the general time frame and general turnaround time that it will take to get this information from them. Once again, pre-approvals can offer peace of mind when it comes to things like attending auctions, but again, this one's a little bit iffy because auctions can kind of get out of hand and they're a little bit more complex than just putting an offer form in for a property that you're looking for. Just keep in mind again that a pre-approval isn't a guarantee of money being lent to you from the bank. It is a conditional approval. It is them saying, yep, based on what we've seen from you, we will most likely give you this money when you decide to make a purchase. Just understand that a bank will generally do a valuation of the property you plan to purchase, and be wary of not overspending or overstretching from that pre-approval amount limit, because they generally won't increase that any further depending on how much you're willing to pay for this property. I will most likely make a video in the future about the process that a lender will take you through in order to obtain a pre-approval. Today, I just wanted to cover the topic about what a pre-approval or conditional approval is and just a general oversight of how it works. For today's video, I hope you enjoyed it. I hope you learned something about what a pre-approval is and why it's important to potentially get one when looking at buying a property. If you enjoyed the video, please consider liking and subscribing. And as always, I will see you in the next one.